All right, welcome back. So, what are we to make of this market, right? Big tech has led the way so far, but the shine is maybe starting to come off of that star, right? We hear about a rotation towards more tangible stocks as the AI trade trickles out to the regular things like maybe energy and infrastructure. So what type of stocks will benefit with the president's new war on affordability? Nothing goes straight up, but some things will outperform others this year, and it's our job to try to find them for you. My next guest, he's got a great way of looking at these markets. Some might even call it a unique way of looking at the markets. Either way, it's going to be an exciting year, and we want the Sultan of Seattle to walk us through his thoughts. So please, without any further ado, welcome to the show, Mr. Keith Fitz-Gerald, coming to us all the way from Seattle, like I said. Keith, thanks for coming on. Always really interested to hear what you have to say. A lot of people write into us after your segments saying they really appreciate what you've got to put out there. What are your key points? So what are you looking at? What are your, you do a Fitz, 5 with Fitz thing. What's top of mind right now with you?
Top of mind is not to get distracted, and let me tell you why. Many people are going out there, the bubble babblers are out in force, the valuation gang's out in force, the spreadsheet gang's out in force, all of which is a distraction. If you look at the earnings, what we're seeing is a growth rate about 8.2, 8.5 by the end of the season. It might even 10, 12%. So good news is actually good news. That's number one. Number two is this concept of where do these companies go? Well, most of them are reporting positive EPS and growth. That also is good. So the distraction, the collision between short-term go-fast traders and long-term investors has never been this significant. Volatility, everybody thinks is a fear point, is actually an opportunity for investors. So this earnings season, we're going to see AI begin to monetize. We're going to see the trickle trade as it starts to bleed out into other industries. You and I have talked for a long time about how there will not be a business on the planet that does not adapt, adopt, or die. So that's what's happening now. That's the earnings season I'm seeing. I like where the markets are right now, and it's a great thing.
So I like being places that people aren't. And I still like AI, and I think you do too. I love it. And all of this talk about the star, the shine coming off that star, moving money out to other things, the great rotation trade, whatever, that's fine. And I'm sure there's some of that going on, and I understand why. But they all talk about maybe the market won't be led by big tech anymore, and I don't think that's the case, at least personally with me. I still think that the gains are going to be made there, and they're going to be great gains, and we still can't imagine how great those gains are going to be. And so I like kind of hanging out there. I'm not going to be spooked out of my position. Is that crazy?
No, as a matter of fact, I'm right there with you. There's times in your life when you want to search for the needle. There's times when you want to own the haystack. If you're looking at companies, this is basic Econ 101. Every CEO in the big four, they're going to report this week, Apple, Microsoft, Meta, and Tesla. Every single one of them is going to talk about how much money they're spending on AI. Every single one of them is going to talk about the way they're spending it. Every one of them is going to talk about what they expect next. CEOs and companies don't make that kind of expenditure, hundreds of billions of dollars, unless they understand something very, very basic. Demand is off the charts. That's not a market that's hurting. That's not a market that's looking for capital. It's not a market that's going away anytime soon. So investing, big tech, is going to come right back to the head of the class. It's just had the shine taken off of it because of all of the other influences we just mentioned.
And then we did a story yesterday with Nancy Tengler. I think you know who she is. But we talked about Tesla. She's a big fan, as well as you are, I believe. And you know what? So he's wrong with his 26, 27, 28. It doesn't matter. I'm not going to bet against the guy. I did early on in my career, and it cost me dearly. I've gotten on board, and I've made a lot of it back. And I still think that getting behind Tesla is not getting behind the electric car. It's getting behind Elon Musk and what he maybe do with SpaceX and the likes. And that type of thing, we don't know what we don't know. We only can imagine. I mean, he's really now, he's on board with this domestic robots. I mean, you've mentioned these robots before. That could be a massive market for them, right?
Well, not only a massive market, it's going to be a game changer for human history. It's going to alter the trajectory of our planet. And that's the thing you want to think about. I mean, Nancy's super smart. We've spoken many, many times at many of the same conferences. She gets it. And the thing with Tesla, let's use that as an example. The cars are really like the iPhone in the Apple ecosphere, right? They're mobile computing data collection centers. They're going to enable robotics, all the chips, the energy, the batteries, going to another planet. All of this stuff meshes. It's not disparate industries working independently. And so when I made the comment a while back that Tesla could be $20 trillion, even he agreed with it, Musk himself. So like him or not is not the issue. The issue is, can you, as an investor, look at a company like that and afford not to own it? That's the real piece that people need to be thinking about.
And by the time you figure that out, if you hadn't owned it, it's probably a little bit too late.
Bingo.
Like it is with, say, silver and gold right now. Anywhere else we're looking in the market here before we go? Give us another little clue what your thoughts are.
Well, defense stocks are still very much a no-brainer to me, for obvious reasons. Geopolitics are going to be upset. I think that we're going to see pharma make a run here shortly because AI hasn't really yet gotten into that operations. But the mundane is also incredibly attractive right now. Look at what Walmart is doing. 1/3 of America or more shops there every week. They're a tech company that happens to be in the retail game. It used to be they were a retail game that was investing in tech. Now that's flipped, and we haven't even begun to see that value flip into the balance sheet and onto the P&L yet. So I think it's tremendously undervalued for all the wrong reasons.
And you're right. And I think that there's more of those out there. I mean,
Yep.
I had another guy on earlier today. He calls them the average Joe stocks, and I think that's a good name because they're the ones that are next in line to be really affected by this technology, this artificial
Bingo.
intelligence, and the likes. And so I'm incredibly excited. I know we have some, nothing goes in a straight line. We're going to get bumped off course a little bit, maybe from this Japanese yen carry trade or the Japanese yields spiking a little bit. That could cause a little bit of a problem. But at the end of the day, the U.S. economy looks to be on really solid footing. What say you before we go?
Well, that's the thing. Good news is actually good news if you're an investor. If you want to be a scaredy cat and a nervous Nelly, you're not going to make money. Investing in optimism is the path you want to pursue if you're interested in profits.
If you're interested in profits, that's the key. Keith, thank you very much. The Sultan of Seattle. Love having you on. We'll see you again next week. Appreciate you coming on the show.